You've probably heard about the Panama Papers and the Paradise Papers late last year. Millions of documents revealed the offshore tax practices of vast corporations and wealthy individuals, including the Queen of England and more than 3,000 Canadian individuals, corporations, or trusts. Why do I bring this up? Because you might have also heard of something called the Voluntary Disclosures Program. I'm Peter Gay of PWL Capital, and you're watching Do It Together Financial Planning. Now, before I start talking about the Voluntary Disclosures Program, I want to state that the Canada Revenue Agency, or CRA, has not yet determined if any of the Canadians mentioned in the Paradise Papers has done anything wrong. That's because using offshore trusts and corporations isn't illegal if it's managed properly. But some corporations, and people listed in the Paradise Papers perhaps, may not have declared everything that they should have to CRA. If you do find yourself in a situation where you made a mistake on your taxes or didn't file, and yes, that does happen, you can correct your mistake through the Voluntary Disclosure Program. For example, many people work abroad for a few years while remaining Canadian residents, but either don't realize or forget to declare their worldwide earnings on their Canadian tax returns during that period. Now, the rules have recently changed a bit for this program. My next video will go over the changes and explain some of their effects. For now, here's a general overview of the program. The Voluntary Disclosures Program, or VDP, gives you a second chance to change a tax return you previously filed, or to file a return that you should have filed. You can use this channel to ask for relief from interest, prosecution, and penalties that might otherwise be charged if CRA had found the mistake themselves. It's also pretty accessible. Almost anyone can apply, from individuals, corporations, trusts, and partnerships. The trick to VDP is to apply for it before the CRA comes knocking on your door. That's because there's a strong chance that they will find you if you have evaded your taxes. It's become much easier for CRA to find tax evaders for a number of reasons. 10 years ago, the CRA created a whistleblower hotline, which pays 15% of the taxes collected to the whistleblower. They also created the Offshore Compliance Division, known as FINTRAC, which monitors all international transfers of money, and they now regularly get information from foreign governments by virtue of international tax treaties. In 2014, for example, the Organization of Economic Cooperation and Development, or the OECD, held a meeting, and 111 jurisdictions agreed to exchange banking information for non-residents living in their respective jurisdictions. Those who get caught can face penalties that can be as much as 200% of the value of your foreign assets. Filing a voluntary disclosure doesn't mean that you won't pay any tax. The average tax paid on voluntary disclosures ranges from 20 to 35%, depending on your marginal tax rate, your province of residence, the presence of unexplained deposits, the composition of your portfolio, and how significant the unrealized or paper gains might be on your portfolio. You'll still have to pay tax, but it's a better option than paying 200% of the value of your assets. Now, I'm not telling you this to scare you. We all make mistakes or have been given bad advice in the past. What's important is that you correct these as soon as you find them. The CRA understands this, which is why they offer the VDP program in the first place. Choosing voluntary disclosure could prevent criminal charges and fines, avoid civil tax penalties, provide significant concessions on interest, and immunity against audit. Plus, you get peace of mind, which is priceless. I'll put some links below if you want to read more about the Voluntary Disclosure Program and the Paradise Papers. Don't forget to follow, subscribe, like, and share. Thanks so much for watching. This has been an episode of Do It Together Financial Planning.